Now, there's this general belief out in the marketplace, and I don't know where it came from, but there's a general belief that new apartment construction doesn't work. It's difficult to pencil out. Have you heard that before? I mean, in fact, if you go to the club and you start telling people you want to build apartments, they're going to sort of look at you funny, okay? And so sometimes I say, well, let's not think about what people are saying. Let's look at what people are doing. And when you say that there's no new apartments built in Canada, you know, so we kind of stopped and counted the buildings built after the year 2000. And we found 400 new rental buildings in Canada. Just going to walk through the cities here. We didn't make these up. And these developers aren't losing money. So there have been a lot of new apartments built in Canada in the last 13 years, but nowhere near enough that we need. And think about it, 400 buildings over 13 years in 10 provinces, that's not a particularly robust number. But there are people building apartments and they are making money. Now, people say there's no apartment transactions. Well, these are the transactions that we've done in the last 2 years, and actually we've done another 3 in the last couple of weeks, so that would be 18 if I'd got them on here in time. So that's 18 new buildings that we've sold. It's interesting that when we first started selling new buildings, lots of people want to buy new buildings, for sure. There's a lot of buyers, but they want to buy buildings that are fully stabilized with a 2-year income stream, right? You're paying $200,000-$300,000 per unit. This is not a place that you want to make a mistake if you're an acquisition manager, right? So they want to buy buildings stabilized with a couple years income. That's fine, and a few of the buildings would do like that. Then there was demand. People bought buildings with 1 year stabilized income. Then people bought buildings with 6 months of income. Then we sold some buildings that were just leased up. They just got to 100% occupancy. Then we sold a building that was at 50% occupancy and the old guy agreed to lease it up while the new guy bought it. There was a rental guarantee in place. Then we sold a vacant building, and the last 2 buildings we sold were just a piece of dirt with a vision and a set of working drawings that the developer bought. And that is defined as a forward sale or a pre-sale. So a forward sale is where someone has a contract with you to build a specific building on a specific piece of land at a future date, right? That's a tricky negotiation to do, but we've done a couple of them and we have a number of them on the go. And these are some of the deals that we have on the go right now. We have many others in the oven. So there's definitely going to be more apartments built, I think, in the next decade than probably the last 2, 3, or 4 decades than we've had in Ontario. So why have developers been hesitant to build apartments? Canada is a terrific country on the world stage. Ontario is a great province. Toronto is a great city, and we've had condominium building that's off the page compared to almost anywhere else in the world. You drive around Toronto and you'll see cranes everywhere building condominiums. Why have we not built rental property? Well, a lot of people say it hasn't penciled out. I'd say historically it might not have, but there's been a lot of changes that have happened in terms of compressing cap rates, lower interest rates and things like that, that now apartments make sense. And many of you, I think, are in the position to become merchant apartment builders. Again, that's not a term we use in Canada a lot, but a merchant apartment builder who's someone who builds apartments for sale. So any discussion on apartments has to have a discussion on rent controls, right? And we're going to be uppity and cheery all day except for the next 2, 3, 4, 5 minutes, where I'm going to tell you sort of the history of rent controls in Ontario. And it has been a nasty history. And when you go to investors and when you go to equity partners and things like that to talk about apartments, they're going to bring these issues up. So you need to understand the issue. So here's the condensed version of the history of rent controls in Ontario. So prior to 1975, Ontario was just like any jurisdiction in the world. There were basic landlord and tenant laws. You had to turn the heat on. You had rules for evicting people, but there were no rents. There were no rules about rent regulation. You could charge whatever you wanted, and the marketplace determined the price, just like it is in most real estate, certainly in commercial real estate. So 1975, Pierre Trudeau was the prime minister. It was a time of high inflation, for those of you that recall, and Trudeau brought in wage and price controls nationally. The Ontario government at the time was, interestingly enough, a conservative government. That's Republican type for you American guys. And Bill Davis brought in rent controls, but he brought it in with a sunset clause in it. So it had a 2-year sunset clause. It would expire after 2 years. Just kind of like they brought in income tax after World War I to pay for the war. and then it would go away once they paid the debt. Well, the same sort of thing happened with our rent control system. Here we are now 35 years later, and we've had 7 incarnations of rent control. So when they brought in rent controls in 1975, developers said, okay, we're going to stop building. Well, we couldn't do that. The population was growing like crazy. So the government said, here's the deal. If the building's already built, it's under rent controls. But if you build a new building, it will be exempt from rent controls forever. And so some developers believed that. They continued to build. Some didn't, and they stopped building, right? So in 1980, so now we're 1975, 1985, we have a liberal government, David Peterson, if you remember, right? David Peterson brought in a new piece of legislation, and he said forever was over. And he retroactively bought all those buildings under rent control. So that was nasty. You were told, go ahead and build, they won't be rent controlled, and 10 years later, he brought them under rent control. Wasn't a good thing to happen. At that point, new apartment construction basically ended in Ontario. Certainly we've had some nonprofit housing built, but there's only so much money to build nonprofit housing, right? The private sector generally provides housing, affordable housing, luxury housing, all kinds of housing across the marketplace. So that got disturbed in Ontario. In 1991, the NDP got elected. They toughened up the rent control legislation. And up until this point, it was the unit that was controlled. So if you imagine a box, or a box with 100 small boxes in it, they're all apartments, the unit was controlled, not the person. So if I lived in a unit paying $1,000 a month and I moved out and you moved in, the landlord could only charge you $1,000, plus the statutory guideline, right? So 1995 comes along, Mike Harris gets elected. He understands the problem about just arbitrarily lifting rent control. You couldn't have the rents of, little old ladies doubling. It'd be on the front page of the Toronto Star. Politically, it was something you couldn't do, even if you believed rent controls were wrong. So Harris brought in sort of a compromise piece of legislation. It was called the Tenant Protection Act, and this is where the change occurred. He said, we're going to move to a system of vacancy decontrol, meaning if I'm living in the apartment building and I'm paying $1,000 and I move out, I, as the landlord, can charge the market rent. So if the market rent were $1,200 or $1,300, I could charge you that $1,200 or $1,300, right? So I voluntarily moved out. The next day I voluntarily moved in, I paid a higher rent if that's what the market demanded, and that became the new rent. Now he became rent controlled at $1,300, and I could just raise his rent by the statutory guideline, the 1%, 2%, 3%. Basically, it's the consumer price index every year. So we went from controlling the box to controlling the tenant. Everybody with me? Okay, that was a big change, because what that meant was now every time somebody moved out, I could raise the rent to the market. So if I had a terrific building at Yonge and Eglinton, that's a trendy neighborhood in Toronto, and the rent was $800, the market rent might have been $1,100, $1,200. And if I renovated the apartment, it could be $1,300 or $1,400. So under rent control, landlords didn't have any incentive to maintain their building beyond building standards that the city put out. All of a sudden now, it became customer service oriented. And people started fixing up their buildings, and they could raise the rents when people moved out. So the balance in the legislation was the existing tenants were protected as long as they stayed there, but new people voluntarily came in and could raise the rent. So what that meant is it took that artificially depressed floor and it allowed it to slowly move up as people turned over. So that happened in 1998. We're now a number of years beyond there. And so the marketplace has sort of equalized. There's still people living in units who were there before 1998 paying a lower rent, but the majority of people have moved out since then, and rents have risen. So in a sense, we got to a little bit of a free market. The government also said at that point, any building built after 1998 would be exempt from rent controls forever, to which every developer said, yeah, we've heard that before, and that's where the challenge was. But if you go back and look, the NDP in 91, the Liberals in earlier, and the Conservatives have all now agreed in their legislation that new buildings would be exempt from rent controls. The editorial pages of the Toronto Star, the Globe and Mail have all said rent control has been a failure. So I think we can believe with a high degree of certainty that rent controls for new buildings will not come back. Okay? But that's always hanging around on any discussion about new apartment constructions. We have to put it out there, and the history is there to read about, but I think everyone's realized it's been a 35-year long generally bad experience that has not helped the developers or the tenants in the province. Toronto is a major city, and we probably have less apartments built in the last 13 years. We've had 5,000 units built. Rick, how many apartments do you build in Dallas every year? Pick
15, 20,000.
Yeah, so one city builds 15 or 20,000 units every year. And we built 5,000 last 13 years. So there is pent-up demand, and we're going to talk about that today. That's all I want to say about it, but just understand that that's there, and that problem has been, to most cases, eliminated and eliminated. So why haven't developers built? Number one, there's this history of rent controls. Number two, it's been a white-hot condo market, right? I'm not sure how many condos we have coming, but it's something like 20, 30, 40,000 delivered in the next couple of years. It's been an incredibly strong market. Guys could put their money in, build it, and get out, and that's what they chose to do. And the third reason is I think a lot of people think that there's all this condo product out there in the marketplace, right, that's available for renters. I think that's partially true, but it's not fully true. When somebody buys a condo to invest in, they're looking to make a capital gain. They're going to buy it from the trailer 2 years before it's built, right? Then when it comes to delivery time, they get certificate of occupancy, they're typically going to sell it because this thing doesn't work that well as an investment. You're not going to get a decent yield from what you can do as a capital gain. So I think what happens is a lot of people buy these condos, they flip them when they get possession of them, or they flip them a year later because they become a cash drain on them. So this is not permanent rental housing stock that stays in the marketplace. It's just temporary housing that comes on for an investor who holds on to it and then sells it. So I bet you if you had a 10,000 rental units that came from the condo market 10 years ago, there's less than 1,000 left today that are actually being used as rentals if they started off that way. Okay? So that's an important thing to realize. So let's just talk about Canada. The perfect storm has happened here, I think, in the last few years. The Canadian economy looks pretty good compared to the rest of the world, and there's a lot of institutional money coming to Canada. 4 of the buildings that we showed you that we sold were sold to a Kuwaiti pension fund, right? And they would buy more if there was more to buy. So Canada's seen as a very stable place to invest, and if you're going to bring $1 billion to Canada, you're going to want to pick a number, 25% of that in real estate. And if you've come here for safety, apartments are the safest asset class to be in. And pension funds want their apartment buildings to look like their office buildings. And our 40 and 50-year-old apartment buildings don't look like that anymore, right? So the pension funds are here, the institutions are here, they'd like to buy new apartments. We need to get people to build them, and that's really the purpose of this seminar today. So there's definitely a shortage of institutional quality apartment buildings. We've had very low interest rates, and CMHC financing is a real bonus to the apartment business, and all of that has resulted in significant cap rate compression. And you see cap rates in Toronto between 4 and 5% for good buildings, sometimes below that. Again, we'll talk about cap rates today for new apartment construction with the panel and have a full discussion in that. But this opportunity wouldn't have happened without the compressing interest rates and the corresponding lower cap rates. So I'm going to quickly cover, I think, what are 10 myths and realities about new apartment construction. Okay, so number one, nobody's building new apartments in Canada. I showed you 400 buildings that were built there, so that one's just not true, but I think a lot more could be built. Number two, and this often comes from condo developers, they'll say, why would anyone pay for a rent if they could afford a condo? That's just a belief that people have that I think is wrong. So people rent only because they can't afford to buy. That's not true. Not all renters want to own. Not all renters want to own. There's definitely a lifestyle renter component in our marketplace. There are in all marketplaces. Our lifestyle renter just can't find a place to build, and oftentimes he's forced to buy a condo or rent a condo. The second issue is they say that home ownership is unaffordable to the typical renter. Well, if you look at the numbers, and this was a study done by GWLRA, and I took this off their webpage. If you take renters' income and you target them at buying the lowest 10% of condos, so the cheapest 10% of condos, 50% of renters can afford 10% of the cheapest condos. So if that were true, those people would be buying those cheaper condominiums, if that were purely true, and it's not. So there is a lifestyle renter market. We've just missed it in Ontario for the last 35 years. And we've got a couple of US guests here today that'll talk about this, and there are many, many opportunities to build apartments, and they're typically going to be luxury apartments. The other myth is that we think that all people live in high-rise buildings. That's actually not true at all. This is data that comes from CMHC, and CMHC tracks all the apartment buildings in Canada that are 6 units and over. And if you look at these cities here, look at the city of Brampton, for example, 67% of renters are living in the casual universe. They're living in houses, townhouses, basement apartments, duplexes, and things like that. okay? And the only city that has a small percentage there of people living in the informal market is London, Ontario. And London, Ontario has 27% of the people living in the informal market. London is probably the only market in Ontario where there's significant new apartment construction. So in a town of 400,000 people, London has had 6,000 units built in the last 10 years. Toronto has 4,000 built in the last 10 years. So a lot of Canadians are living in non-purpose-built rental housing just because that choice isn't there. If that choice is there, I think that they would gravitate to newer quality buildings. Another myth that people think about is that, you know, building a condo and a rental are the same thing. You know, they might look the same from the outside, but the way you're going to think about it, design it, and finance it, and we're going to ask this question to our panel today, but a lot of people are surprised when I say to them that the lobby of the rental building actually needs to be better than the condo building. You know, you're going to sell that condo from plans. You're going to have to rent that building every year for the next 30, 40, 50 years. And with turnover being around 30, 35% in a new building, that lobby becomes very, very important. In terms of amenities, again, I would argue that a rental building probably needs more amenities than a condominium building. If I'm a condominium buyer, I'm a pragmatic guy. I walk into the lobby and I see a fountain there, I'm going to think about my maintenance fees. If I'm a renter and I walk in and I see a fountain, I'll go, that's a nice fountain, right? So the renter's thinking in 12-month increments at best, right? The condo guy's a pragmatic guy thinking about making a permanent investment. So you generally need to have more flash and more pop. And Mark Humphreys is going to talk about that when he speaks today and show you lots of pictures. Jonathan and I are also going to have a good discussion about that. So you need a better lobby. You generally need more amenities. Your unit mix is different. I mean, we're looking all the time now at condominium buildings where the developer is saying, sales are slow, we're thinking of doing this rental. He's got 17 floor plans. You don't need 17 floor plans for a rental. You know, you need 4 or 5, right? And you build this thing straight up like this, same size windows everywhere and things like that. So there's efficiencies there. And generally in finishes, they're not the same as a condo. Probably in a rental, you want them to be a little bit more robust and so on. If I could give you an analogy, in the condo business, you're selling the steak. In the rental business, you're selling the sizzle. That make sense? Nobody in the rental business says, what's the price per square foot? No one says, I paid $2.47 per square foot. Every condo buyer knows what price he's paid per square foot, $400, $500, $600, right? So the mentality, the way you approach the business is a little bit different. So in terms of designing the building, it's different also. Remember, you're selling this building the entire building, in theory, turns over every 3 years with a 30% of your turnover. You're selling the sizzle, not the steak, and you need great lobbies and great amenities, okay? Now, this is a myth, and this is probably the biggest one. I'm probably going to say this more than once today. A lot of developers, experienced, smart developers, are very good at you know, buying and entitling land and sort of figuring out how much that costs, and they're very good at construction and figuring out what that costs, okay? But this is really all about the rents. And let me walk through a numerical example with you, and you can just follow along up there. You can see the formula for cap rate, okay? So let's say that you build a 20-story high-rise building in a nice location in Toronto, and let's say it has a view of the water or the river or the park or something like that, right? And you've got a row of bachelor apartments, and the ground floor bachelor apartment starts at $1,000, okay? Now the bachelor renter is the poorest renter in your building. He's just trying to get into a good building at the lowest price he can. He's not going to pay you a view premium or much of a view premium. So if you're going to get $1,000 on the ground floor, you're probably going to get $1,000 on the 20th floor because you've got a guy that's just scraping by to get in. Make sense? Okay, now assume you've got a nice corner unit with 2 bedrooms in it and a couple is living there. It's got a beautiful view of the lake and the park, et cetera, et cetera. They will pay for a view premium. And let's just say that view premium is 10%. That's being fairly conservative. So on the ground floor, you're charging $2,000. By the time you get to the top floor, you're charging $2,200. Okay? So on average, your rent is $2,100. So you're a developer now building a building, and most times they just pluck a number out of the air for rent. They'll say, well, we know our land costs, we know our construction costs. Let's just pluck $2 out of the, you know, as the rent and put it into our formula. And then they'll come back and say, you know, it doesn't work or it's too thin or things like that. The point I'm trying to make here is that this rental has a huge impact. So now let's take that $100 per unit that we missed in the view premium. And I'm not talking, we're missing a small thing here. right? We've done our proper market survey, we just haven't put a view premium in. You take $100 now at the bottom, multiply it by 12, and divide it by a 5 cap, which might be a fair number for a new building, and that's $24,000 per unit that you've missed in your pro forma. That $24,000 per unit may be enough to push that deal now over the line to make sense for you, okay? So if you can make a mistake on something as simple as a view premium, think about the importance of getting the rent right. And as cap rates compress, the amplification of that ratio to NOI just becomes tremendous. So we'll talk today about market surveys and the importance of how do you determine a rent when there are no comparables in the market. So I mean, I've done market studies in Dallas, and they're actually pretty easy to do. There's like 10 new buildings on the same street, right? And so on. But in Toronto here, when you go to build a building, there is no building across the street. There may be no building for miles away, right? That's new or comparable. How do you determine the rents? We're going to talk about that today. The capital stack is quite different for condos versus rentals. I'm going to leave that discussion to our financing panel, but I would just say that the fact that we have CMHC financing available in Canada is a terrific thing for the apartment business, and we'll talk a fair bit about that today. Number 7, the lease up process is quite different than the condo selling process. It's also much cheaper. Typically you guys are spending maybe 5-10% of the total price of the unit in terms of sales and marketing, and I would argue that number might be 3% for an equivalent rental building. So that would be the lease up and the brokerage and the selling fees and so on. The sales staff are different. We'll be talking a little bit about that today, but you need professional salespeople when you're selling top of the market rents. So when you're charging $1,800, $2,200 per unit, you need salespeople who are as competent as the people who are selling condominiums and things like that, because the person you're selling to can easily afford a condominium and is of that sophistication. But the good news is sales costs are much lower. Oftentimes developers I'll go into their office, I'll sit with them, and they'll just pull out their calculator and kind of pencil out the apartment deal. But it just doesn't work that way. You've really got to get down to the detail, like I gave you in that view premium, right? It's very easy to make some broad-based assumptions. Like people say, okay, so the income's $1 million, let's use 40% for expenses. Well, you just can't do that, right? And typically the number is lower than 40% because you've got the denominator effect that just brings that percentage down. But so the typical mistakes that we see in pro formas is that landlords typically use too low a rent in the pro forma. They forget about other income, parking, antenna income, things like that. They use too low a vacancy rate. So if the vacancy rate in your city is, and our vacancy rates here in Ontario are very low, let's say 1.5%, they'll plug 1.5% into their formula. Well, you can't do that. It's 1.5% for the average rent in Toronto, which is $1,100, $1,200. You're not the average rent, you're $1,800, $1,900. So you need to put in a vacancy rate that's higher than that. You might want to put in 2 or 3% because you're going to have turnover. It's going to be more challenging to lease out. And typically, when a developer is looking at, or when a buyer is looking at buying an apartment building, he's usually looking at it on a 10-year IRR basis, as opposed to just what's the current cash flow and what's the current cap rate. And we'll flush that through in some other sessions. But it really is important that you look at this the right way. As a merchant builder, you're looking at it one way, the bank is looking at it another way, but the buyer who's buying a new building and he's paying $200,000, $300,000 per unit, he's looking at this over a 10-year IRR, okay? And it makes a lot of sense over a 10-year IRR to build apartments. So why are we holding this convention today? We're brokers to the apartment community. We also do feasibility studies for new apartment construction. As we just started thinking about this, there is a gap in the marketplace. And a gap in the marketplace, I think, is good news for developers. We talked about a big gap yesterday, student housing. There's opportunities all over Canada, but there's specific opportunities in university towns. I think that there are opportunities to build apartments, not just in the major metropolitan areas, and we'll go through some examples later today of apartments being built in small cities. I don't know if you could see that if I went through those videos too fast, but a lot of those places where apartments built were not, metropolitan areas. There were lots of apartments built in smaller areas. For example, most people wouldn't think you could build an apartment building in Sarnia, Ontario. Sarnia is at the border of Michigan and Port Huron on the other side. A developer there built an apartment building, 150 units. He leased the building up in 3 months. The average 2-bedroom price in Sarnia from CMHC is $800. The average price for his 2 bedrooms were $1,800. So there's a disconnect between average rents for 40-year-old buildings and what you're going to charge out there. So there is, in a lot of our markets, retired nurses, policemen, firemen with strong incomes. in cities that don't necessarily look like they've got great rental rates because there just are no new buildings. And that Sarnia one is a real good example. So where's the gap in the marketplace? First is finding land, right? We have one guy in our shop who just does land. Finding equity money, the amount of money you need to build an apartment is significantly more than you need to build a condominium. So if you're going to build $100 million worth of apartments, you're probably going to need about $30 million in cash. Most developers don't want to put that much money into a deal. We found equity partners that are willing to partner with you. Next is train the developer. You've got to almost, if you're a condo developer, you almost got to take off your condo hat before you come into the conference when we talk about apartments, because a lot of those thoughts that you believe are absolutely correct for condos, but they are not correct for apartments. And you've got to rethink the business a little bit. You've got all the internal skills to do this, but the design is different. Certainly the management is different if you've never done it before. Then you've got to complete a feasibility study, and that's what we do, and we'll walk through one at the end of the day with you as to how we do it. But how do you get the rent on a building where there's been no new building built there before? So if you go to Ottawa, where there haven't been a lot of buildings built, and you've got a great site in downtown Ottawa, how do you determine the rents? Well, we'll go through that with you. It would be great if there were a building right across the street. There isn't one, but that's also the good news. There's not a lot of competition there either. Then we'll talk about the lease up, property management, and at the end of the day, are you building this thing to hold it, or are you building this thing to forward sell it, or do you have a partner who wants to be in and out in 6 or 7 years? That's going to determine again a number of factors as to